Hi there. Just wanted to share an article that I read this morning from Fortune magazine. I thought it was interesting. It had a great little sort of tagline, the first line. This is from Lance Lambert, August 4th, so it was yesterday, and in Fortune magazine. So there's only one housing bull left standing, and that's Zillow. And so this is Zillow's predictions, their monthly predictions updated from July 2022 to June 2023. They predict home prices will rise another 7.8%. That's well above the historic annual appreciation average of 4.6%. Now, this is in stark contrast to research groups like Zelman and Associates, Capital Economics, John Burns, Real Estate Consulting, who all think that the country is inching towards falling home prices. So the question is, why is Zillow remaining so bullish? Well, it comes down to inventory, to supply. Between the first week of January and the first week of July, inventory levels on Zillow jumped 18%. But even with that jump, they're still in a historically tight market. And I'm going to take that, I'm going to move over to some regional data, just so you can see a little historical information for Montgomery County, Maryland. So this data is from the MLS, and this shows the end of June, there were 1,177 active listings. Now, I track inventory on a little spreadsheet of mine weekly, and now there's just over 1,300 as of this past Monday. So if we take 1,300 as the current number, and let's go back to the beginning of 2020, April, March. So you can see at the end of March, or actually let's go back to the end of February of 2020. So we sort of take out the crazy market of the past couple of years. There was 1,318 listings active in Montgomery County, which is roughly what there is right now. And then if you look at that 1,318 and we go back to all the dips, even the low point in 2018, there were still 1,400, 1,700, 2,000, 2,200, 1,733, and if we go back to 2013, there were 1,600 and looks like 1,476. Sorry. So we're still well down from the averages for the prior years, and certainly it's moved up. If you look at the bottom, this year it was 499, and now we'll call it up. It's up to 1,300. But again, going back to what they said about historic numbers, that gives you a little local data. So that being said, this latest Zillow forecast does mark another downward revision. At the beginning of the year, they were talking about appreciation in the middle teens. I think even the high teens. I'd have to go back and look. But certainly in the middle teens. And now they're down at about 7%. But, you know, the market has changed dramatically. And interest rates have spiked up. They're still, although they've actually taken a little move down over the past couple weeks, and so the June high of just over 6, now they're closer to 5, but they've moved up substantially, and that's changed the math for a lot of people. So then we'll move on down here, and this says that the housing market is quickly rebalancing from what had been arguably the strongest sellers market in decades. Absolutely correct. And the Fed has put the brakes on. They're hoping that they can not crash and send things spiraling into a recession, but they've certainly put the brakes on. So again, nationally, Zillow foresees 7.8% housing price growth over the coming 12 months. But it will vary a lot, region by region. And so I love these maps that Fortune does. They take the data from different providers and put it in this nice format. So let's go over, let me find, so there's the DC area. So what they're saying about DC, what Zillow's saying is that we're going to see regionally 4% price appreciation over the next 12 months, which is pretty close to the historic norm. So let's move on. So among the 911 regional housing markets Zillow economists analyzed, 906 are predicted to see rising house prices. So only 5 are predicted to see falling house prices, which is pretty optimistic, I would say, but who knows? Over the coming year, they have 741 markets will see price growth of 5% or greater, and 136 will see price growth of 10% or greater. And they outline some of the markets that they think are going to see high price growth. Keep in mind, some of this is already baked in because the numbers that they're using and that they will be using for the next few months are properties that went under contract earlier in the year, 30 days, maybe even 60 days ago. And so then we're going to look at the map, same map, based on the data that Moody's Analytics has. And you can see there's a lot more red there. So let's see what Mark Zandi, the chief economist at Moody's, has to say. He believes that the U.S. housing prices are basically going to remain unchanged, and that would mark the lowest level of home price appreciation since 2011, so the end of the Great Recession. But that's nationally. On a regional level, they see about half the nation experiencing falling home prices, which means half the nation will see rising home prices. Now, one of the things to note is that their time frame is different than Zillow's. They're talking about a 24-month time frame, whereas Zillow's only looking ahead 12 months. But basically here what they're saying is that they think that prices are going to be flat for the rest of this year versus Zillow's 7.8%. And down here at the bottom, it talks about the fact that the steepest declines are going to be in markets that are significantly overvalued relative to underlying economic fundamentals. And if a recession comes, a lot of people would argue that the recession's already here, but that's a whole nother conversation. Those markets could see prices fall by as much as 15 to even 20%. Now, one thing to note is that if you look at these two markets, Boise and Austin, they had appreciation last year that was well over 20%. I think that Boise was close to 30. So they'd be given back, call it a year's worth of appreciation, but certainly not the dramatic crash that we saw back in 07, 8, and 9. If you'd like to keep up with what's happening in the local market, I'll put a link and you can subscribe to this report, no charge. And it goes through a lot of really interesting data points about what's happening in Montgomery County. It's got the Market Action Index, which is the little speedometer, and then this nice summary table of list price and days on market, price decreases, lots of information that'll keep you up to date with what's happening in today's market. If you have any questions, please feel free to reach out. My contact information is below. And if you'd like to check out some of my prior videos, I'll put my last market update over here so you can see sort of how I read some of these charts. And if you'd like to subscribe to my channel, click over there. Thanks for watching, and I'll see you on the next one.